Good morning to all our unmasked US viewers. I don't know if it's the threat to oil, the Democratic predilection for corporate America, or plain stupidity, but with the New York strain plummeting vaccine effectiveness, one wonders just how cheap human life is becoming. The premature decision to unwind pandemic restrictions isn't helping US equities. The Nasdaq weakness spreads to other major cities. The Russell down 1.75% despite Biden's multi-trillion-dollar relief bill. Not surprisingly, Republican leader McConnell said pumping money was not enough of a reason to remove masks. That's quite a reversal from his Trumponian days. Personally, I've been waiting for a bubble burst for ages, and the pressure on big tech firms is coming in from everywhere. We've seen drops on the Nasdaq before the moving average a couple times over the past year, but we quickly crossed back above the moving average to maintain the momentum, except back in March last year, where we failed and lost quite a bit. On the hourly chart, we can see that we've been consistently below the weekly pivot, with R1 sitting there like a magnet. The dollar continues inching up as Redbook puts the same store sales growth at 4.6% year on year, up from last week's 2.9%. Total vehicle sales for February fell a bit to 15.7%. Bloomberg this morning reports that New York rents are plunging, up to 16% in Manhattan, for example, after the COVID pandemic is pressuring many to leave their cramped apartments. Some of them, having lost their jobs, they can't pay the rent. Instead, they've moved to the burbs where they're paying lower taxes and enjoying warmer weather. The result is an influx of bargain hunters. Ahead of Friday's NFP, we'll today be seeing PMIs and mortgage data. European indices were marginally on either side of the zero mark yesterday. The ECB's Fabio Panetta had some bleak warnings for the European economy. He said banks should increase purchases and that sentiment was taking a hit because of slow vaccine rollouts. UK shop prices contracted by another 2.4%, while house prices surprisingly added 6.9% in February. British Treasury Tsar Sunak will today announce an extension of the government's furlough scheme, whereby it finances 80% of wages for people on leave. The EU's year-on-year CPI contracted by 3 ticks to 1.1%. Again, later this morning, service PMIs from the EU, Italy, France, and Germany. China is leading Asian indices up this morning, with the Hang Seng up 2.2% and the Nikkei at the rear with a 0.5% increase. Hong Kong's manufacturing PMI in February jumped 2.5 points to finally land at an expansionary 50.2. Germany's Zoo Institute yesterday said it expects the Chinese economy to hit a record high by year's end. Services improved somewhat in Japan, but lost a 0.5 point in China and 2 in Australia. The Australian dollar remains southbound despite a much better 3.1% reading for last quarter's GDP. That nation's trade balance will be reported at midnight GMT tonight. Oil got a $1.50 kick in the head yesterday after the API reported a 7.4 million barrel increase in oil stocks. It's since recovered about a third, and it's back above the 60 mark. And Bitcoin continues zigzagging higher than lower, I must say, after SEC head nominee Gary Gensler told his Senate confirmation hearing that he intends to ensure crypto markets are free of fraud and manipulation. The man is known to be a huge crypto advocate. Right now, we're upward bound in an ascending triangle. Both the RSI and MACD are positive, and a break above should easily take us to 51K. Meanwhile, Massachusetts Senator Elizabeth Warren said she's expecting Bitcoin to implode because it's speculative in nature. She's obviously not been on a trading platform lately. And Bill Gates says he doesn't like Bitcoin because it's bad for the environment. Facebook CFO David Werner told a tech conference yesterday he expects the company's advertising to suffer this year as vaccinated users return to purchasing services rather than goods. Target yesterday reported earnings, Q4 revenue expanding 21% year-on-year to $28 billion, HP, on the other hand, lost 2% revenues year on year, landing at $6.8 billion. Stellantis will be reporting today alongside Vivendi and Marvel. Well, we can only hope Wanda Maximoff has a satisfying episode 9, even though the director is warning otherwise. Meanwhile, may the Schwarz be with us.